Welcome to the deep dive. So, if you've been watching the Taiwan stock market recently, you've probably seen things have been a bit, well, bumpy.
Yeah, definitely some volatility there. And maybe lower trading volumes too, it seems.
Exactly. And that brings up a really interesting question, I think. In this sort of environment, how do you even find potential opportunities without getting totally bogged down? That's what we're looking into today.
Precisely. And our focus here, especially for you if you want to get informed quickly and effectively, is really looking at how AI, specifically something like ChatGPT, might be used
Used for what exactly?
to potentially develop a consistent trading approach. For Taiwanese stocks, one that aims for a positive expected outcome, even with these market conditions we're seeing.
Okay, positive expected outcome. And we're not necessarily talking about, like, hyperactive day trading, are we?
No, not at all. We're exploring if ChatGPT can help with more targeted screening. Maybe, say, a daily screen, possibly even around midday.
To do what? Pinpoint trades?
Yeah, to identify potential trades that might have a good shot at a positive return. And ideally, doing this with a minimal number of actual trades within a fairly short time frame.
Gotcha. And what about folks starting out maybe with less capital? You mentioned odd lots earlier.
Right. That's important too. We'll definitely cover how you might begin to apply these AI-assisted ideas, even if you're trading smaller amounts using odd lot transactions.
Okay, cool. So to get into this, we've looked at quite a few things. There are articles on actually using ChatGPT for like brainstorming strategies and even generating code.
hmm And we've also pulled in some academic research, stuff looking at momentum trading principles, statistical arbitrage, those kinds of ideas.
All right, sounds like a good mix. So where do we start? How about that first idea? Using ChatGPT for a midday screen of Taiwan stocks. How would that even work?
Well, that Explain This article we read gives a pretty good jumping off point. It showed how you could prompt ChatGPT to come up with trading strategies.
And it even gave code examples, right?
Yeah, exactly. Code examples. So the idea is you treat ChatGPT like a sort of research assistant, one that doesn't just give you ideas, but maybe even a starting blueprint, the code, to actually try them out.
Okay, so if I wanted to screen Taiwanese stocks around lunchtime, what would I actually ask ChatGPT? What's the prompt look like?
You'd need to be pretty specific. First, tell it the market, Taiwan Stock Exchange, obvious, but necessary.
Right.
Then the timing midday, like you said. And crucially, what's the goal of the screen? You're trying to find stocks that meet certain criteria for a potential trade. You have to spell that out.
Okay, so it's not just, hey, ChatGPT, find me some good stocks around noon.
Definitely not. You need to give it parameters, real things it can look for.
Like what, for instance?
Well, this is where some basic trading knowledge helps. You could talk about price movements, momentum,
Okay.
or maybe big changes in trading volume that can sometimes signal something's up, or even basic technical indicators like is the stock above its 20-day moving average, things like that.
So drawing from those general ideas the article mentioned, momentum, mean reversion, breakouts.
Exactly. Those concepts give you a foundation. You could ask something like, list Taiwan stocks above their 20-day moving average at 12:30 p.m. Taiwan time that also saw, say, a 15% volume spike compared to the last hour's average.
Ah, okay. That's much more concrete.
Yes. And the interesting part, like the article showed with PineScript for TradingView, is that ChatGPT might actually generate the code snippet you need to run that screen automatically on a platform.
Which could give you a daily list matching your rules.
Potentially, yes.
Now, that code generation part sounds amazing. But the article also warned about trusting it blindly, didn't it?
Yeah.
Something about hallucinations.
Absolutely. That's a huge caveat. Hallucinate is a good word for it. ChatGPT isn't always factually correct, especially with technical stuff like function names or the exact syntax.
It has an example, right? Some
Yeah.
function that didn't exist.
Yeah, they mentioned a market position function that sounded plausible but wasn't real in that context. So the takeaway is you have to verify everything. Check the code, check the functions, expect to tweak prompts, ask follow-up questions, and definitely test and debug anything it gives you.
So it's a tool, an assistant, but not an oracle. You still need to be the one driving and checking.
Precisely. It's not infallible.
Okay, right. So let's say we use ChatGPT carefully. We verify we get a list of potentially interesting stocks midday. How do we then figure out which ones have that high probability of a positive return, that positive expected value we talked about, and do it without making tons of trades?
Okay, yeah. This moves us into that core concept, expected value. Basically, over many trades, you want the potential win times the chance of winning to be greater than the potential loss times the chance of losing.
Right. Simple idea, hard to execute. How does the research, like that momentum paper, help here?
Well, the ArtSAF paper we looked at talks about expected returns and this thing called serial correlation.
Serial correlation, meaning what happened recently tends to keep happening, like momentum.
Sort of, yeah. If a market like Taiwan's, perhaps, shows some short-term momentum, then a strategy buying stocks that just went up might have a statistical edge, a slight bias in its favor.
Okay.
But the paper also mentioned positive skewness, which is interesting.
Hold on. Expected return is about past trends maybe continuing. What's positive skewness? How's that different?
Good question. Positive skewness means that even if there isn't a strong overall trend or serial correlation, your results might be characterized by lots of small wins and losses, but also a greater chance of occasional really big wins compared to really big losses.
So the wins, when they happen, are potentially much larger than the typical losses, even if wins aren't more frequent overall.
Exactly. So a strategy could still have a positive expected value over time, not because it wins constantly, but because the occasional big winners outweigh all the small losses and small wins.
So even if the market's just chopping around sideways mostly, catching those few big movers could make a strategy work.
That's the idea behind relying on positive skewness, yes. Now, linking this back to ChatGPT, remember the Explain This article mentioned tuning parameters and using a strategy tester.
Yeah, backtesting.
Right. That's absolutely essential. You take a strategy idea from ChatGPT, refine it, and then run it against historical Taiwan stock data, see how it would have done. That's the only way to get a somewhat realistic estimate of its past performance and potential expected value.
So you're stress testing the AI's idea against history. Makes sense. What about needing a clear edge? Why should a strategy even work?
That's fundamental. You need a reason, a logic. Is your strategy exploiting a known market inefficiency, a behavioral bias? The AI can suggest frameworks momentum, mean reversion, but you need to refine it into something that logically should have an edge in the Taiwan market context.
Okay. Now, we also looked at those Investopedia pieces on things like candlestick patterns and risk management, stop losses, take profits. How do they fit into this picture of getting good returns with fewer trades?
Right, so candlestick patterns. The idea there, as Investopedia explained, is they visually represent price action and can sometimes hint at market sentiment or short-term direction changes.
So you might use them to fine-tune when you enter or exit a trade?
Potentially, yes. You could add a condition to your ChatGPT-inspired rule, like not just buy when it crosses the moving average, but only if a bullish hammer candle forms, for example, trying to improve timing.
Okay. And the stop losses and take profits.
That's crucial for managing risk and directly impacting expected value, and also for minimizing trades. By setting those levels before you enter a trade, as the risk management article stressed, you predefine your maximum acceptable loss and your target profit.
So you know your potential risk and reward up front for each trade.
Exactly. It helps you lock in profits when you hit your target and cut losses quickly if it goes against you. This reduces the need to constantly watch and make decisions, potentially leading to fewer, more calculated trades. It directly shapes the R&R part of your expected value calculation.
Got it. The outline also mentioned pairs trading briefly. Could ChatGPT help find those kinds of positive expectancy opportunities too?
It's possible. Pairs trading was one strategy type explored in the Explain This article. The concept, often linked to statistical arbitrage, is finding two stocks that usually move together.
Like two banks, maybe?
Could be, yeah. Then, if their prices diverge unusually, you bet on them coming back together, reverting to the mean. If you can reliably find pairs that have this strong historical relationship, this co-integration, then yes, it could offer positive expectancy.
But maybe more complex to start with.
I'd say so, especially if you're just starting out with AI assistance. Focusing on simpler single-stock strategies generated via ChatGPT might be a more manageable first step.
Okay, good point. Let's pivot then to the listeners who might be working with smaller capital, trading odd lots specifically. How does all this AI stuff apply to them?
Well, the nice thing is the underlying logic doesn't really change with trade size. Whether you're trading 1,000 shares or, 10 shares in an odd lot, the criteria you use to screen for opportunities can be exactly the same.
So a small capital trader can use the same ChatGPT prompts, the same back-testing approach we've been discussing.
Absolutely. The key for them, perhaps even more so, is starting with a real focus on learning the basics and very careful risk management.
Practical first steps.
Definitely open an account with a Taiwanese broker that explicitly supports odd lot trading. That's step one. then getting comfortable with a platform like TradingView, the one mentioned in the article, could be really useful.
Because of the charting and backtesting tools.
Exactly. Charting, backtesting, and maybe even setting up alerts based on the strategy rules you develop with ChatGPT's help.
Now, that article went deep into setting up automated trading for crypto. Can those steps be adapted for odd-lot stock trading in Taiwan?
The core idea of automation, yes, but the specifics will be different. The article talked about getting API keys from Binance, using GitHub, Heroku, setting up TradingView webhooks, that whole workflow.
Right.
The fundamental principle of using an API to link your strategy logic to your broker and using alerts to trigger trades, that can apply to stocks. But, and this is a big but, a small capital trader needs to research which Taiwanese brokers offer suitable APIs and how to set up webhook alerts specifically for their chosen platform. It won't be identical to the crypto example.
So the technical implementation requires homework specific to the Taiwan stock market infrastructure.
Definitely. And that quantity parameter they showed in the crypto alert message, for an odd lot trader, that would just be adjusted to the smaller number of shares they're trading.
Okay. So advice for them starting out.
Start simple. Use ChatGPT for clear, testable strategy rules. Then paper trade first. Seriously. Simulate trades with no real money on the line.
Test everything.
Test the strategy logic, test the platform, test the automation setup if you go that route. Or start with tiny real money trades and absolutely use stop-loss orders religiously. Protecting that limited capital is paramount.
Makes total sense.
Yeah.
Okay, let's try and wrap this up. If you had to boil it down, what are the key takeaways for someone listening who's thinking about using ChatGPT for trading Taiwan stocks?
Okay, main things. 1, ChatGPT can be a useful tool for brainstorming trading ideas and even getting code snippets for the Taiwan market. That's pretty cool.
But there's always a but.
But 2, you need to be careful. Be skeptical. Prompt it very precisely. Verify everything it tells you, especially code. It can make mistakes.
Hallucinations again.
Right. And 3, backtesting on real historical Taiwan data is non-negotiable. That's how you get any sense of whether a strategy might have a positive expected value.
And for the odd lot traders.
Same principles apply. These AI tools can work for them too, but the focus has to be on learning, starting very small, and extremely disciplined risk management. Protect that capital.
Got it. So final thought to leave our listeners with. Something to chew on.
Yeah, how about this? We've mostly talked about using AI for technical analysis today, price, volume, indicators. How might things change if you started incorporating fundamental data?
Like news sentiment, financial reports.
Exactly. Could AI help analyze those things too, alongside the technicals, to build even better strategies for the Taiwan market? And maybe more importantly, what are the biggest pitfalls or limitations a smaller investor really needs to watch out for when they start relying on AI for trading decisions?
Definitely food for thought. Combining different types of analysis with AI and understanding the inherent limitations. Good questions.
We'd certainly encourage you to explore backtesting tools more, really nail down risk management, and investigate what your specific broker or preferred platform offers for algorithmic trading support in Taiwan. And yeah, let us know what you find, or if other questions pop up as you look into this.